Pay close attention to what I'm about to tell you, because what's at stake is the survival of your assets in the most volatile decade of modern history. Turn off distractions and understand once and for all, this video is not speculative rambling, it's not a cheap conspiracy theory, and it's definitely not another clickbait designed to feed retail anxiety. What I'm about to reveal is a leaked X-ray, a direct forensic diagnosis of the inner workings of the global market that is happening right now, while you breathe. As a financial investigator and macroeconomic strategist, my mission is not to echo the irrational panic of the masses, but to dissect the anatomy of an imminent collapse, separate the algorithmic noise from the structural reality, and reveal the true power asymmetry. The crisis is not a projection for the distant future. It has already begun and has a birth date set for early March 2026. A coordinated attack of catastrophic proportions in the Middle East struck the beating heart of the global energy infrastructure, piercing the system's main artery. Saudi Aramco's gigantic Ras Tanura refinery was engulfed in chaos, while Qatar Energy had to indefinitely halt its liquefied natural gas production after critical facilities were destroyed. The immediate and brutal consequence of this implosion? European natural gas prices exploded by an absurd 40% in a single day, registering a terrifying supply shock. This is not a stumble on the graph. It is the fulminating evaporation of global energy liquidity, a tectonic event that serves as the perfect catalyst for a systemic and irreversible death spiral. You are about to hear exactly what the mainstream media, sponsored by the very funds on the other side of your negotiating table, categorically refuses to report. Television news continues to anesthetize the public with narratives about past gains from inflated indices, treating this exposed fracture in geopolitics as if it were mere regional and temporary noise. It's a systemic trap designed to keep the herd docile while the global financial elite scrambles for emergency exits, anchoring their portfolios in real, unconfiscatable assets. What the suited anchors are hiding is the violent structural disconnect between scarce physical reality and the mirage of paper money. Stay with me, because I'm going to show you how this rotten plumbing of the Western futures market is about to burst, and how you can protect yourself before the final collapse. What you need to swallow now is the red pill of the global financial system. The security you see in your brokerage's numbers is accounting fraud, an illusion designed to hide structural bankruptcy. We are not facing a simple technical correction of precious metals. The real crisis is the violent and absolute disconnect between tangible physical assets and the mirage of synthetic money. Think of it like the central plumbing of a skyscraper. On the outside, the wall looks intact and robust, but inside, the main pipes are completely clogged. The pressure reaches critical levels, and the pipes are about to burst. The East, strategically led by China, has perceived this bottleneck. They have begun a relentless race to drain all physical liquidity from the financial system, using it as the ultimate refuge against this devastating and unprecedented geopolitical shock of March 2026. While the East accumulates tangible gold and silver, the Western machinery that sustains the illusion of stability is failing miserably. The West's price discovery mechanism has broken down. The COMEX futures market and giant index funds like the SLV ETF have transformed into machines for issuing synthetic derivatives, unbacked papers that mask real scarcity. Imagine an endless row of falling dominoes. When oil and natural gas suffer a massive structural shock, institutional algorithms panic and are programmed to short-sell industrial metals. They blindly price in an immediate global industrial recession, flooding the market with paper silver contracts. This automated and irrational action artificially pushes prices down, creating a suppression bubble that in no way reflects the frantic demand and absolute scarcity of the physical metal on the streets. The gravity of this algorithmic manipulation becomes evident when we examine the traces left by the system's architects. A deep sweep of SEC filings released on February 26, 2026, revealed a shocking institutional maneuver designed to avert imminent implosion. Jane Street, a giant quantitative firm and liquidity provider, suddenly took a record position in the SLV ETF for the last quarter of 2025. They amassed a mountain of 20.7 million shares, valued at approximately $1.6 billion, leaping from irrelevance to becoming the fund's largest institutional holder. Understand, Jane Street doesn't bet directionally on silver. They engage in cold arbitrage and liquidity provision to manage the flow of panic. They attempt to maintain the illusion of flowing plumbing and prevent an immediate and irreversible collapse of blind retail confidence in the entire Western fiat system. But the dominoes falling in the West are encountering a reinforced concrete wall in the East. After 2025 registered historical records, pushing gold to break the critical $5,500 barrier early in 2026 and silver to touch $100, the Asian market initiated a frenzy of tangible protection. Assets under management in physical gold ETFs in China skyrocketed a staggering 243% in 2025, reaching 242 billion yuan. At this very moment, between February and March 2026, physical premiums remain severely stretched across Asia. We are witnessing brutal strangulations in the actual supply of bars for the desperate Chinese retail investor. The Eastern investor rejects the false digital promise on a Fed-funded computer screen. He demands the physical weight of the real asset, systematically draining the reserves that underpin the fragile and decaying facade of the global financial system. Herein lies the inescapable systemic trap and the most bitter red pill to swallow, the mathematical impasse that inexorably condemns the New York and London stock exchanges. The West frantically dumps thousands of synthetic silver and gold contracts to absorb the volatility of the energy shock. The intention is to mask the meltdown in purchasing power and create a mirage of control. However, while computers on Wall Street trade unbacked bills, Shanghai demands ruthless liquidation in real bars. It is mathematically impossible to liquidate a notional trillion-dollar volume in paper derivatives when the global physical backing is being bagged and shipped to China. The fiduciary system's plumbing is under immensely greater pressure than its structural capacity, and the catastrophic rupture of these illusory liquidity valves is no longer a theoretical probability, but an empirical, structural, and devastating certainty. The coup de grace of this collapse mechanism is the self-sabotage of the very institutions that should be protecting stability. When the Federal Reserve, allied central banks, and liquidity providers artificially suppress the price of paper metals, they believe they are buying time against hyperinflation. However, the real effect of this arrogant manipulation is suicidal. They are simply handing the East the opportunity to buy scarce real metal at a chronically subsidized discount. It's like selling the concrete foundations of your own house for brass coins to try and pay the electricity bill. They continue printing illusory derivatives to control the panic of uninformed retail investors, while Asian powers smile and fill their coffers with uncontested cash. The collapse of this brutal divergence will destroy the wealth of those who blindly trusted the numbers flashing on the screens of Western brokerage firms. If you think this macabre distortion is an isolated event in the timeline, you're about to make the most expensive mistake of your life. Financial history doesn't just rhyme, it repeats itself with relentless mathematical cruelty. What we're observing on intelligence monitors today is the dangerous and lethal fusion of two devastating systemic events: the catastrophic 1973 oil shock converging directly with the brutal strangulation of the Hunt brothers' silver squeeze between 1979 and 1980. The behavioral patterns of the market and financial elites repeat themselves with frightening accuracy. It's happened before. The warning signs were exactly the same, and mark this in your memory. Those who ignored reality to trust the false security of the fiduciary system lost absolutely everything overnight. The first stage of this systemic trap is always institutional denial, shoved down the throats of retail investors by the mainstream media. Just like in the 70s, the idle press obsessively focuses on past and unrealistic gains in stock indices, treating the current energy shock as a mere regional and fleeting hiccup. They talk about economic resilience while the foundation melts away. It's a silent death spiral, where the average investor is hypnotized by green charts of inflated assets, while real purchasing power suffers a real-time evaporation of liquidity. Those who lived through the 1929 crisis or the 2008 subprime collapse perfectly remember this collective anesthesia. The media smiled and recommended calm precisely on the eve of the implosion, ensuring that the herd remained within the corral while the institutional sharks evacuated capital to safe harbors. The second stage is emergency suppression, a dirty and desperate tactic executed by the strong hands of the financial market. Just as happened to stop the Hunt brothers in the 1980s, institutional giants today violently dump thousands of synthetic contracts during periods of extremely low liquidity, such as the lethargic opening of the New York Stock Exchange. The objective of this ambush is not to reflect the asset's value, but to force the mass triggering of stop-loss orders by leveraged retail investors, restarting market sentiment through brute force. It's an armed robbery disguised as a technical adjustment. They manipulate the rules of the game and crush prices on paper to try to stem the imminent panic, transferring the losses from this structural implosion directly to the individual investor who dared to challenge the system. Finally, the third and final phase of the cycle materializes with the absolute collapse of the divergence. We are already on the threshold of this abyss. The premium on physical assets explodes in such a way in the East that the farce of the Western stock markets becomes unsustainable. The exact day will come when COMEX and the London markets will be forced into an irremediable gap up, an instantaneous and violent price jump to try to prevent the total and definitive draining of their emptied coffers. When this forced repricing event occurs, the escape window will be hermetically sealed for you. Just as in the historical disasters of 1929, 1973, and 2008, the shock of reality will not ask permission. Those who hold on to the papers and synthetic promises will be left holding financial ashes, while those who understood the historical pattern will be protected in the unshakable fortress of real scarcity. If you still naively hope that the Federal Reserve, global central banks, or Western governments will emerge as heroes to save your wealth at the last second, wake up now. The true institutional trap of this economic cycle is the terrifying realization that the system has completely lost control of its own destiny. They are trapped in an unprecedented mathematical death spiral, operating in absolute darkness. Unlike the 2008 crisis or the recent liquidity shock, the state's money-printing machine has become utterly useless against a physical and palpable geopolitical supply shock occurring in March 2026. You can't print barrels of oil, you can't create liquefied natural gas in Excel spreadsheets, and you definitely can't synthesize physical silver bars by pressing buttons on Wall Street terminals. The illusion of the institutional savior is over. Right now, the Federal Reserve and Western powers find themselves between a rock and a hard place, suffocated by a dilemma with no amicable solution. If they try to contain market panic by injecting trillions of fake dollars and artificially suppressing interest rates, they will fuel rampant and terminal inflation, instantly destroying global confidence in the fiat dollar. This evaporation of foreign exchange liquidity will force the average citizen to pay exorbitant prices for energy and basic food, transforming a financial crisis into an immediate social collapse. The currency will melt in the hands of the middle class, while the East continues to drain real assets. Any massive injection of capital to save the banking system will be nothing more than gasoline thrown on the flames of structural hyperinflation, relentlessly eroding the purchasing power of the population and sealing the tragic fate of Western fiat currencies forever. On the other hand, the alternative to this inflationary scenario is equally lethal for the system they swear to protect. If central bankers decide to keep interest rates brutally high and restrict credit to try to combat the rampant rise in natural gas and oil prices, they will trigger a widespread implosion of corporate and government debt. Zombie Western companies, surviving exclusively on subsidized credit and rolling over bad debt, will suffer monumental defaults. We will witness a chain reaction of collapses of pension funds, insurance companies, and liquidity providers in the derivatives market. When the cost of money becomes unbearable amidst a devastating physical energy shock, the real economy suffocates. It is the perfect and cruel definition of a systemic trap. There is no magic rescue button, and any attempt to cure the disease will kill the patient instantly. To keep the accounting charade running and prevent a complete capital flight, large corporations and the state apparatus will resort to the most draconian and authoritarian measures ever seen in modern history. The natural next step after the evaporation of liquidity is the violent and coercive implementation of severe capital controls. They will close the slaughterhouse gates while desperate retail investors are still inside. If you think you can redeem your funds and sell your shares in the SLV ETF when the crisis reaches its emotional peak, prepare for a brutal reality check. The institutions themselves, like Jane Street, will invoke force majeure clauses to freeze withdrawals, forcibly liquidating smaller investors to stem the institutional bleeding. They will ruthlessly sacrifice the average citizen, melting down their paper money to protect what remains of the power and infrastructure of the financial elite. Understand once and for all that the state, at this very advanced stage of economic decay and structural energy collapse, is no longer the protector of your wealth, but rather your greatest silent adversary. Government regulation, which has always been sold as the impenetrable safety net for savers, has become a bureaucratic trap designed to imprison your liquidity within a rapidly sinking ship. By trusting the traditional narrative and believing that the suits at central banks will orchestrate a smooth, magical exit, you are voluntarily signing your own certificate of absolute financial ruin. The illusion of normalcy is over, and any measure taken now by the establishment will only accelerate the disintegration of purchasing power in the West. The system cannot and will not save you, because the system is desperately fighting and failing miserably to try to save itself from final implosion. The time has come to abandon the paralysis of fear and take absolute control of your financial destiny in this silent war. The first asymmetrical move, the non-negotiable foundation of your survival, is the construction of an impenetrable asset defense bunker. You must immediately begin the inflexible and systematic accumulation of strictly physical precious metals, aggressively focusing on tangible gold and silver. The lethal detail here is custody. These bars or coins must be kept strictly outside the jurisdiction of the traditional banking system and under no circumstances through synthetic index funds. Understand the mathematics of the imminent implosion. If you hold a share of a massive paper ETF like the SLV during an extreme liquidity event, you will be summarily executed. You are not the owner of the asset. You are the counterparty, sacrificed by the predatory algorithms of Wall Street. The second move transforms your defensive position into a surgical and lethal attack against the very system that is trying to crush you. You must actively arbitrage the colossal price divergence between East and West, positioning yourself against the pathetic distortions of institutional algorithms. While Asian mining companies are already pricing in the brutal reality of the physical market at violently high limits, the stock of large senior mining companies located in safe Western jurisdictions continues to artificially bleed into the red. This glaring discrepancy reflects the desperate and artificial suppression of prices orchestrated daily by the futures contracts of the American COMEX exchange. This is the perfect asymmetry. You acquire now for pennies on the dollar and at an extreme discount the shares that represent the heavy productive infrastructure of the most coveted, scarce, and geopolitically essential physical asset on the entire planet at this very moment of historical and irremediable strangulation. The third and final asymmetrical move requires you to immediately cut the anchor that ties your portfolio to the Western fiat mirage. You need to ruthlessly divest all positions in inflated growth stocks and digital assets that rely on cheap liquidity, redirecting that capital to real producers of energy and basic infrastructure. With the brutal shock in the Middle East and the shutdown of European natural gas in March 2026, energy has become the new global reserve currency. Whoever controls the physical flow of fuels or owns independent productive land will dictate the rules of survival in the next decade. This counterflow strategy shields your assets from the inflationary death spiral and the absolute collapse of the dollar, positioning you alongside the owners of the real means of production, while the ignorant masses passively watch the relentless evaporation of their virtual balance sheets. The systemic collapse we've just dissected won't be honestly reported on the evening news, nor will your commercial bank manager warn you about it until it's too late. What you witnessed today isn't the end of the story, but the prologue to a brutal financial war for the survival of your assets. In this scenario of evaporating liquidity and structural implosion, delayed information is as lethal as utter ignorance. That's precisely why you can't treat this channel as mere casual entertainment. You need an unrelenting radar, a source of continuous intelligence operating outside the numbing narrative of traditional media. Subscribe now and activate all notifications. Join our trench of financial sentinels to track the unfolding of this global crisis in real time, step by step, before the rupture. Facing the fiat system's death spiral alone is the equivalent of walking blindfolded through an institutional minefield. Wall Street's predatory algorithms and central bank bureaucrats rely exclusively on your disorientation and tactical isolation to transfer wealth from the bottom to the top. By positioning yourself within this community of lucid minds, you cease to be algorithmic prey and become part of a highly precise macroeconomic monitoring network. We will continue to dissect every move on Jane Street, every liquidity squeeze in Asia, and every failure in the COMEX pipeline. Your registration is your passport to access this unfiltered data stream and anticipate the shock before the stock market's exit gates are forcibly locked by cornered Western governments. Now that the structural diagnosis is on the table and the gears of the collapse have been exposed, I demand that you conduct a brutal and honest audit of your own vulnerability. It's not enough to absorb this intelligence and continue operating on the autopilot of deluded retail investors. Theory without tactical execution is merely anxiety disguised as knowledge. I want to know exactly what your line of defense is at this very moment of strangulation. Look at your investment portfolio now, without the rose-tinted glasses of institutional optimism, and answer me with absolute sincerity in the comments section below. What percentage of your sweat and lifetime of work is still trapped in paper assets that depend on the promises of others to exist? Are you truly protected, or are you just another synthetic hostage? I want you to go down to the comments and tell me openly, have you already started the strategic migration to physical metal under your exclusive custody, or are you still holding on to the toxic shares of the SLV ETF, praying that liquidity providers will have mercy on your capital in times of panic? If the government decrees an extended bank holiday next Monday to stem the capital flight, how long can your family survive outside the fiduciary network? This is not an empty opinion poll. It is a visceral exercise in confronting reality. The debate we have in the comments section is where true collective intelligence is formed. Your answers and strategies help sharpen the defenses of our entire community against the clutches of a zombie financial system hungry for other people's liquidity. Always remember the golden rule in this unforgiving geopolitical chess game. The Western fiat system was not designed to protect the small investor during a systemic mathematical implosion. It was coldly engineered to use you as exit liquidity for large corporations. The countdown to the total collapse of the metals futures market and currency meltdown is already underway, and the hands of the clock move forward with each new energy shock in the East. The time for theoretical preparations ran out the moment the first refinery was hit. Continue operating in the shadows, ruthlessly accumulate real scarcity, and absolutely reject all illusions sold by the news. We remain vigilant, monitoring the fractures in the global market 24 hours a day. Stay strong, stay protected outside the system, and we'll meet in the next Forensic Intelligence Report.